everyone, my name is Ishika Jain and I welcome you to BrainVibe. Today in this episode, we will talk about trading psychology. Now everyone has a different psychology when they trade, but there are few mistakes that we make using such psychologies. Today in this video, I'll be talking about 6 main trading psychologies that people generally have. So the first one is, sometimes we have a particular opinion about a stock that we want to trade in. However, in reality, the fundamental news may not be that great trigger to drive the stock price higher. But at a subconscious level, we tend to look at the piece of information that generally support our view. Basically, when we have a trading opinion, we only look and assimilate the piece of information that supports our view. Our brain generally stops paying attention to the news that is opposite to our original contention. In such way, people tend to make losses in their trade. The second one is turning in a blind eye. Let's understand this with example of my friend. He owned few stocks of a company. The results of the company were announced and it showed that the company was in huge debt. He started facing losses, but he didn't sell it immediately as he saw a green candlestick in the chart and that turned him bullish, and he was trying to convince himself that there is more up move left. But that generally does not override the fact that the company was in huge debt and one should not invest in such stock. But later on he started facing more losses in it. So how can we overcome this psychology is we need to look with the wider picture and not with the microscopic view. We cannot weigh the recent fact with the actual fact. Now the third one is, there's a myth that more data means quality of information. Traders, especially technical traders, complicate their chart so much by adding n number of elements to analyze the chart. The best analysis is done when things are kept simple. Complex does not necessarily always mean better. So what we can do is we should start working towards data-driven approach rather than complicating our charts. The fourth one, and a very common psychology, is when the stop loss gets triggered. Apparently, when a stop loss gets triggered, one needs to sell their stock as that's an alarm of their risk appetite, and it says that this is the only amount of loss one can bear. But what a trader tend to do is he keep investing, he keep trading in the same stock until the losses turns into profit. In fact, that start making more losses for him. The fifth one is over trading. Trading 10 to 15 times in a day to make the trade fun and exciting. In fact, traders believe that they are traders, so they need to be busy in that whole trading session. In fact, trading has to be boring as it requires patience to wait for the right price at the right time. One should have a track of their investments. They should make a trading plan for at least a month in which they can have a plan of how much amount to invest, how much return they are expecting. In that way, they can trade on daily basis. Also, there are investors who follow different strategies in different ways. One need to follow one strategy and master in it. The sixth one and the last one is that each trader has a particular price in their mind that they want to trade in. If the price goes higher, they think that the time of buying a stock has gone and they don't trade in it. But in fact, what they should do is they should look at the long-term perspective and still see if the company is good and should they trade or not. What happened with me was I wanted to trade in Happiest Minds when it was around 500 rupees. But the price kept on increasing and increasing. So I thought that maybe the buying price has gone and now I should not trade in it. But if you see the price of Happiest Minds right now, it has touched around 900 rupees. So it is one of my most regretful decision. But yeah, this is what happens, that we think if the price is increasing, then we should not buy it. But we should also look at the long-term benefits. So yeah, I guess this is all about today's video. If you like it, please give it a big fat thumbs up. Don't forget to subscribe to our channel. See you in the next